Good afternoon. This is Tom Asprey with the Viper Report. It's Sunday, June 7th. My latest article on Forbes.com is now available. There's a link in the email. Don't throw caution to the wind. Those of you who read last week's article, I talked about the bullish way the market closed. For 2 weeks in a row, we had very strong advanced decline numbers on a weekly basis. That's not too normal. This was the third week. So heading into this week's action, you can see that the NYSE weekly all AD line here in green had moved back above its moving average, was now in an uptrend. Stocks only had flipped above its moving average, but was clearly still weaker than the all AD line. In the regular and special updates, I've been featuring oftentimes a 60-minute chart of the S&P futures, since oftentimes the trend for the day is set overnight. You can see that way back here on the second, we broke out above this resistance at 30.65. A nice move up. On the third, fairly orderly pullback here. We broke out between these highs, and it was off to the races, and also shows the powerful open on Friday. Though the futures closed below the highs, overall action was pretty strong. Despite the improved technical outlook, however, sort of the thrust of this weekend's article is the fact that we've had a nice push to the upside recently. The S&P here has reached its upper Stark band and exceeded its monthly pivot, so a couple of days of pullback would not be surprising. It doesn't have to happen. You can see below this the S&P AD line is very strong and a very sharp uptrend. It's also quite a ways above its rising moving average. Oftentimes it'll sort of pull back to that moving average as part of a sideways movement in the stock market. Also in today's article, I point out how frequently we see corrections and pullbacks during this bull market. You can see these areas in blue. We've had some pretty severe ones already this year, obviously, but most years we see a 5 to 10% pullback in normal times. These are hardly normal. We did take some nice profits at the end of the week. We are in the SPDR S&P Regional Banking ETF, KRE. We got in on May 29th here on this little pullback. That was our first buying level. Our second one was down in here. Unfortunately, we didn't get that. Kind of sideways quiet early in the week and then really took off. When I saw the futures action prior to the jobs report, I was looking to take a double-digit profit at 42.63 or better. Of course, when we opened, we got filled out at 45.87 for over a 19% profit. This does not happen every day, but when it does, it's really a nice surprise. Also, we sold out half of one of our stock positions. It was recommended in this special market update. You can see here that on May 27th. This is kind of updates we've been sending out fairly regularly, showing the advanced decline oscillator here on the NYSE, and then down below this was Proficient, the stock PRFT. It just pulled back to its moving average. Things have started to improve here, so we got long at this level, as I said, going into the 27th. Both of the buy levels were filled here in PRFT, so typically what I do in that case is I try to sell out half the position if the market goes my way at around a 8 to 10% profit. So we'd hit in this R1 resistance on Wednesday, and we had a pullback on Thursday, so I said, okay, well, let's get out at 37.26. That's where we were sold half the position for about an 8.9% profit. We're holding the rest of it, and of course I'll move the stop up there to protect a profit on the second part of the position. There are several new recommendations for stock traders in Monday's reports, which I'm just in the process of writing. And if you'd like specific advice, hope you'll try either the Viper ETF or the Viper Hot Stocks report. Each is just $34.95 a month. You get at least 2 reports a week plus 6 trading lessons. And if should you have any questions, you of course can always email me at tom@viperreport. Well, I can't guarantee that this week is going to be as exciting as last week, but I guarantee it'll be interesting. We have an FOMC meeting starting on Tuesday. We're not really looking for any surprises there. Consumer sentiment on Friday should be interesting. I would expect after the better than expected jobs number to have that number be better than most are expecting. Stay tuned. Thanks.